Welcome to the Funeral Funds Life Insurance Podcast. I'm your host, Randy Vandervate from Funeral Funds of America, and you can find us at funeralfunds.com. That's funeral, Funds.com. Whether you're interested in term life, whole life, mortgage protection, annuities, disability, business continuation, or final expense life insurance, we have you covered. Our team of experienced professionals will guide you through the complexities of insurance products to help you make an informed decision. In this podcast, I'm going to be discussing the difference between group and individual final expense life insurance. Now, you may have worked for an employer in the past and they offered you group life benefits. Certainly, while you were working there, you probably had some benefits like health insurance, medical insurance, other benefits from working there, 401ks, different things like that. In most cases, you probably, if you were a salary employee, had a life insurance benefit. And a lot of times that life insurance benefit may have been like one time your salary. So if you make $50,000 a year, you would have had a $50,000 policy provided by the company that you work for that they owned, and they just extended that benefit to you. Same thing, if you made $250,000 a year, you would have a $250,000 death benefit policy. Now, different employers handle it differently. You could be one times the death benefit, 2, 3, 5, 7. We see a lot of city jobs, kind of government jobs, where they allow you to multiply that times 5, times 7. The challenge with many of those policies is, however, that when you leave your employment, your insurance goes poof, poof, it goes away, right? Because it's through their benefit plan extended to employees. And when you're not an employee, they don't extend that to you anymore. So that's the real challenge with that is that, what happens if you leave your employer to an employer and go to an employer that doesn't offer those benefits anymore? Now you don't have that life insurance benefit. What happens if you get sick and you can no longer work and now you really need that insurance? Maybe you got a terminal illness and you can't work, so they terminate your employment. Therefore, your group life insurance goes away, and now you've got a terminal illness. And if you don't have insurance, nothing's going to pay. Nothing's going to pay income, right? So let's talk about those two. Let's talk about group life insurance and individual, just to give you a better understanding. So again, group life insurance is just it's obtained through a employer or an organization. And these policies themselves provide individual coverage to multiple individuals in a group or under a single contract. A lot of times your employer is going to contract with the company for the benefits, and they may change those on a yearly basis. That's why you've got your open enrollment period, because they want you to choose kind of what benefits are there, or they'll bring in the company and tell you what benefits are there. Now, the premiums are typically lower in a group life insurance than they are individual life. And the reason is they're pooling a whole bunch of people together. And often when you're coming on to an employer like that, they will just accept you for the base level of coverage, regardless of your current health. Now, in many cases, if you want to add coverage above and beyond what they offer, there may be some medical underwriting there too, especially after you've worked there a while. But generally, it's going to require minimal or no medical underwriting, at least when you start. And that probably won't kick in until perhaps they change plans, or you want to get additional coverage through them. Just understand it is temporary. And when you leave the company or they terminate you, that insurance is not going to go with you in 99% of the cases. And there are limits. Again, many cases, you'll only be able to get the one times your salary. So let's say you made $100,000 a year. You've got a $100,000 death benefit. You're married. You have 2 kids, say age 4 and 6. And, you're on your way home after a hard day's work, and, you get in an auto accident and you die and you don't make it home. Your spouse is only going to get a check for $100,000. That was your income, right? So you've got 4 and 6-year-olds that you left behind, and your spouse is only getting enough income to replace yours for 1 year. And, I'm not real great at math, but age 4 and 6, that's an awful long time until they get to age 18. So, yeah, just it's great that an employer offers this, but it's also woefully inadequate for probably 90% of the people out there. It's just it's not portable. When you leave or they tell you to leave, it's not going with you, and so much of these plans is totally out of your control, especially when they're on an annual basis during open enrollment, switching out different businesses to take care of this for, different group contracts. And maybe there's that one year they go, hey, costs are just going up in the business. We got to save somewhere. And they go, that life insurance, that's the one to go. Poof, gone. So what's the alternative to having so little control over your and your family's and your loved ones' destiny? Well, it's individual life insurance. Now we're talking about final expenses here, right? So keep in mind that any life insurance policy can be life insurance, but in the end, it's all intended for final expenses. That might be burial, cremation, all that. But final expenses are making sure that your family's set up with enough income so that they're not going to suffer, so that they can maintain the same quality of life in your absence. So just understand that even there's a lot of companies that lately, if you think back to Sears, right? Alcoa is another one. Gosh, AT&T, whole bunch of these big companies had these plans, and they said, if you're retired from our company, we'll give you this permanent benefit. And it was permanent to a point, but in many cases, it was a tiered type plan where, at a certain, let's say you had $30,000 worth of coverage. Well, once you hit a certain age, there's a trigger point, and it gets reduced down to 15,000. And then you hit another age trigger point, maybe 10 years later, and it gets cut in half again, drops down to 7,500. And then when that happens again, it gets dropped down to 3,250. And all of a sudden, this permanent benefit is and and keep in mind, as time goes on, prices are going up due to inflation, and your insurance coverage is going down. That's not a great way to end up, thinking you had this insurance, but a lot of people don't read the fine print. So many of these larger companies, once they dissolved, they weren't once thriving companies, and then something happened. Once they dissolved, what happened to that life insurance? Poof, gone, right? Poof, gone. So it just really reinforces that, if there's anybody on this planet that should have your best interest in mind over everybody else, that's you. Businesses are concerned about profit, and they're concerned about ongoing expenses. And it's nice when they offer this coverage, but it's not guaranteed. So the only guarantee is to go out and get your own life insurance policy that you control. And you can get that directly from the insurance companies. Well, when I say directly from the insurance companies, most insurance companies don't let you call up and say, hey, I want to buy this policy. You've got to go through a licensed insurance agent or broker, like myself at Funeral Funds of America. I'm a broker licensed in all 50 states. And the reason they do that is it's a whole lot of staff that they would have to maintain, and they're better off. They've just determined that they're better off doing what they're great at, which is offering the policies, underwriting, doing the research to make sure that they, have policies that are good, sound policies that protect their policyholders, but also allow them to make enough profit to stay in business. And then they just outsource, getting people connected up with their company to agents or brokers like myself. And what that ends up helping you do is it helps you get personalized attention and a personalized policy tailored to your individual needs. Because you're talking directly to me as a broker. And although I work with these companies, I don't work for these companies. So it's not like if I'm a captive agent, which means I work for a company and I can only sell their product. A lot of times they're trying to put like a square peg into a round hole, and it doesn't work because they've only got one product to offer. Well, I work with multiple different insurance companies, so I can shop around based off your age and your health and your coverage needs and all this other unique stuff that makes you one of the most interesting people in the world, right? So age, health, lifestyle, right? Do you do you rock climb? Do you parachute? Do you base jump? Do you scuba dive? All those are specialty risk factors that have to be considered before an insurance company will issue a policy. Now, there's two types of policies in the individual uh, insurance market. There is fully underwritten, which means they do medical, they ask health questions and stuff like that. Probably send somebody out to do a pee test and a urine test and a drug test, stuff like that. And then there's simplified issue, where they simply look at your prescription records just to see kind of what medications you're taking. They might just do a quick review of your electronic health records, and they give you an answer. Well, one takes a lot longer. One can take months to get the fully underwritten, and the simplified issue. A lot of times we're getting answers back within 1 to 3 days. Now, the the faster ones are a little bit more expensive, right? Kind of like the Amazon model, right? You buy, if you're an Amazon Prime membership holder, you pay like $120 or 30, whatever it is, a year to get your stuff shipped out within 2 days. You're paying a convenience fee as a part of a membership to do that. These simplified issue ones are the same way, that you're just paying for the flexibility to do that. But in many cases, it's wise to consider doing that, because sometimes ignorance is bliss. And what I mean by that is, if you do a fully underwritten, they're going to do blood and urine tests, they're going to medical, all that stuff, and maybe they find something that you weren't aware of, and now all of a sudden you're going to be declined, or they're going to increase your rates, your proposed rates, so much that you can't afford it. Well, if you don't know about any of that and you do the simplified issue, you can answer all the questions on their health questionnaire, and you'll be answering those honestly, and then they're accepting that risk for just a little bit more money. That there might be something going on that they don't know about. So it's just there's no right or wrong answer. If you're super super healthy, like running marathons and stuff like that, yeah, fully underwritten can be a good way to go. There's always a risk, especially as we get older, and especially looking for policies for final expenses. Because typically, when we're looking at a final expense policy, we're looking at a policy for when we are older, age 50 to 85. And you know what happens when between the ages of 50 and 85 for most people? Yeah, they have more health issues. They're on more medications, more health things creep up. So, um, also, the individual life insurance, it's long term, it's permanent. If you get into the whole life, it's permanent. And depending on your age, the term life insurance can be long term, up to 30 years with most carriers, depending on your age, of course. Coverage can be chosen based on your needs and your individual requirements. You know, we help a lot of people that consider final expense to be like $1 million policies, multi-million dollar policies. And then we help a lot of seniors that all they want to do is pay for a burial or a cremation. That might be 5, 10, 15, $20,000. Everybody's needs are different. We don't look down on anybody. You know, we help people where they are and where they are in life. And a lot of times we don't get to choose what happens in life. A lot of times things happen and we're along for the ride, especially health or medically related. So just understand that us being a broker, you have more flexibility and options to select and work with different companies. You've got more flexibility and options to select riders or policy customizations that's really going to benefit you over time. Now, if you're looking at a term life insurance policy, those don't build cash value. But if you're wanting to accumulate some cash value and you like that component, that's whole life. You've got the flexibility to do with that. So if you want term life, which has no cash value, you can do that. If you want whole life that carries that cash value benefit, you can do that too, if that's what you're looking for. It totally depends on what your wants and needs and desires are. And the one of the biggest things with owning your own insurance is it just provides you what's called portability, which means no matter where you work or where you go or what you do, you're always going to have this insurance coverage once you qualify, and you're always going to have it up to the term limits or for the rest of your life if it's whole life. And you've got individual control too. So most of the companies, they will allow you to add coverage later. We do that so much. We help people add more coverage later. They start small, and as their wants, needs, and requirements, growing family, just bought a new house, bought a more expensive house, more financial obligations, need to add coverage. You can do that. Total flexibility if you own the life insurance plan for final expenses. If your company owns it, you're stuck. So there's that right there. That's the major difference between group and individual life insurance. Now, again, you can call it life insurance. And when you pass away, that money's meant for final expenses, and if you're looking at a larger, like a term life insurance policy, that's always also providing, replacement income for your loved ones, just to make sure that what you work together so hard over so many years as a family unit doesn't go poof just because you didn't plan. So my name is Randy Vanderveen. I hope this podcast has been helpful to you. Funeral Funds of America can help you qualify for first day coverage or benefits at funeralfunds.com. That's funeral, FUNDS.com. And our phone number is 888-862-9456. We will be blessed to help you with this in the future. Until that day comes, stay safe, take care, and have a nice day. Bye-bye.